Hey everybody, welcome back to another episode of A Millennial's Guide to Real Estate Investing. Today I have Ola Dantis. He invested in multifamily across the US, but focusing on Texas. He lives in Baltimore. In 2018, they did 2 projects, and now in 2019, they're going to focus more on syndications. How's it going?
Going fantastic. It's been a pleasure to be on your podcast. Thank you so much.
Yeah. Yeah, thanks for coming on. So first, tell everybody, I know I did a little introduction, but tell everybody a little bit more about yourself and your backstory and why real estate.
Yeah, great question. So my name is Ola Dantis. Originally born in Nigeria, lived in the UK for a bit, and then now in the US. So kind of giving me that perspective, living on 3 continents. Came to the US a few years ago, almost 5 years ago, and kind of living the dream, right? Living the American dream. Had a good job, had a nice swanky apartment. Life was fantastic. But there was something missing, right? So I felt like there was something more I could do with my life. And I really didn't know what to do at the time, but I just kind of kept my mind open. And I like to tell this story. A friend of mine from the UK called me and said, "Hey, Ola, can you fly to Dubai and meet me in Dubai?" I was like, "Wait, what?" It's like, "Yeah, can you? I've got to meet some investors in Dubai. Can you come to Dubai and meet with me?" So I did, what every smart man does. Asked my wife, prayed to God about it, and my wife was like, "Why do you guys just like Skype? FaceTime? Like, why do you have to fly all the way there?" And I was like, "Yeah, but think about it. Maybe if I learn something awesome, and I bring it back, and that could be life changing." I really didn't know myself, but obviously I knew this friend of mine. He wouldn't just call me and just drag me all the way to Dubai. So I jumped on the plane, and we were kind of in an hotel room for like 3 days, just masterminding, and I was learning a lot about his business in the UK and what he was doing. And just after those 3 days and seeing how much money he was making and how well he was doing, I was like, oh my goodness, like I could just go do the same thing in the US, right? And and that's exactly what I did. I got back, from that trip. I learned so much, and I basically just started digging into real estate investing, went on bigger pockets, listened to all the podcasts I could get my hands on, bought all the books, Rich Dad Poor Dad, Quintessential Classic. And, after reading Rich Dad Poor Dad, my whole life changed. It was basically, the guy was basically saying everything I've been trying to say, I've been trying to articulate in my head, right? And I could read it in plain text. And the reason I bring up this story is some of us just may be in that same position like I was. Like, look, I don't really know what to do, but I just feel like I can do more. And then there might be an opportunity, but then they just feel like, hey, I don't really know if I should take this risk. I don't know if I should do this. I don't know if I should go to this seminar. I don't know if I should take this course. What I'm saying to that person today is you have to get uncomfortable to start to get into the path of success, right? You can't just continue on this comfortable, cozy life and hoping that something drastic would happen. And that's the reason I always, tell that story. Like, I had to go all the way across the world to really get kicked in the butt and say, hey, I got to do something different.
That's awesome. And then so you came back to the US, and then what did you start? What was your next action item? So you learned all this shit, you brought it back, and then what was the next step? What'd you do?
I'm like super obsessive. So I read all these books. I knew what to do. I gathered all this content from podcasts, and I bought my first building, right? Within 3 months, 3 to 6 months of getting back. So we bought a duplex in Baltimore, Maryland. But just to say, in a Class A area in Baltimore. And, we looked at, a lot of properties, and we, got onto this one. It was a very nice area, and was a couple selling it. They kind of moved into suburbia. So we bought it. We had tenants in there already, but the bottom unit was empty. So we moved in. We started collecting rent, right? And I also like to, share this story. My wife just said to me one day, she's like, "Hey, baby, like, I'm actually having a lot of money in my account. I just feel like my account is growing every day. Every time I look in my account, it just keeps growing." I was like, me too. Right? So the reason I'm bringing this up for people is the difference between getting paid every month from your 9 to 5 job to really getting cash flow can almost be blurred, right? If you don't really pay attention and actually take a step back, you might not even notice it, right? But obviously my wife and I had that epiphany and we're like, oh my goodness. So if we can do this, and this is just one building. If we had 10 of this, we wouldn't need to go to work. It would be pointless. So when we realized that, we just said, hey, we're going to go all, full throttle into this. We're just going to keep buying, so thereafter we got a few more projects, and now we just kind of want to help others who, might be in our situation and want to, deploy capital. Maybe they have a 401k that is just sitting there, or maybe they have money in the bank, in the savings account, earning like 0.005%, annualized. We want to kind of help them get into this, larger assets and sharing the profits with them.
That's awesome. That's awesome. And then were you and your wife, did you guys have W-2 jobs at that point when you bought that duplex? And then did you keep on financing them just through conventional, all in Baltimore?
Correct. That's a really good question. Yes, we did have, we had great jobs, and, and what we did was we realized that we could use something called the FHA, right? Because when I spoke, when I speak to a lot of people say to me, well, I don't really have any money. I can't get started. I can't, but you don't have to have that much money, actually. You just have to have 3.5% down as opposed to the typical 20% down. So we, basically use that opportunity with the FHA, which is basically a government program that helps first-time home buyers to, put 3.5% down and buy a pretty good, size property. Now, most folks would take that opportunity and buy a single-family residence, which is fine. But if you're thinking of actually building a successful, real estate investing career and build wealth long term, what I tell people to do is actually find a quadplex, which is 4 flats wherever you are in the country, or a triplex or a duplex, right? So basically, you have extra income from that house, and then depending on where you are, I mean, I know this is the Millennial Podcast. If you're young, right, you could buy one now when you're 23 or 25, and then buy a duplex now, right? And if you're like 30 and you have your first child and you want to go to the suburbia, that's fine. Go buy your, picket fence, beautiful backyard house while you still get cash flow from your duplex that you've bought, 7 years ago. And now you've paid down the principal on that house. And that house could be paying for some of your mortgage in suburbia, right? So that's what I tell folks. It's just a starting point. But usually what happens is when you buy your first one and you have that same epiphany my wife and I had, trust me, you're going to want to buy a few more of it. And that's kind of why we have a lot of, guys like me and you, and we just keep buying because we know the benefits of real estate investing.
Yeah, it's like tattoos. Once you get that first one, you just can't stop getting tattoos. Yeah, I know. And I'm wearing my cash flow over paycheck shirt right now. And yeah, it's that mentality, that rich dad, poor dad mentality of using the money from your W-2 income job. Instead of going and buying the new Tesla, go and buy a 4-unit apartment building, do it with an FHA. When I first started researching too, I was like, and I was about to graduate university, I was like, shit, I can move to St. Louis. I can buy a 4-unit apartment building in an A-class area, put 3.5% down, and I can live I don't even need to work. I can just I can literally move to St. Louis and live for free in a 4-unit apartment building, renovate the other units, raise money to renovate the other units and give some of the cash. So yeah, I think that's a really great starting point. I didn't do it because I didn't want to move to St. Louis. I mean, I'm in LA and it was like 80 degrees in the beginning of March. It doesn't make sense. So, but yeah, I mean, it's a really great strategy, and you do become addicted to the cash flow. And once you get that first taste of it and it keeps working, then, you really can't stop. So in last year you did apartment building. So what markets are you guys looking in? I know you mentioned Texas. Is there any particular city in Texas that you guys are focusing on for what you're doing now?
Yeah, so we definitely like Texas a lot. We're focusing on the DFW area, but also we like the Houston market a lot. Of course, we all know what happened in Houston with the flooding. So now we're definitely taking a more closer look at that market to see, because we typically just, like to buy value add properties, meaning they have some kind of, deferred maintenance that needs to be cured. So we'll, control this asset and then go in, renovate some of the units, raise rent, and then, shortly after refi some cases, or maybe just hold for 5 to 7 years, then exit the deal. So typically that's kind of the life cycle of our deals. And we love to do this obviously with other investors so they can not only make money from the cash flow, as you mentioned about cash flow, but also from the disposition of that asset in
Yeah,
5 to 7 years when we sell, essentially.
got it. And then what kind of returns are you guys looking for when you do your underwriting on your deals for that end investors? So if I have a 401k, what can I expect in terms of return for investing in one of your deals?
Fantastic question. So in some of our deals, we'll use something called a pref, a preferred return. So we'll basically pay investors first. So if you're an investor with us and you deploy capital with us, we will pay you first before we pay the sponsors, well, general partners on the deal. So you get the 8% before the sponsor starts to get paid. So typically we aim for 8% pref, and then obviously hopefully between 12 to 15 IRR, which is basically for the lifetime of that capital with us.
Got it. All right, cool. And then are you worried at all about, so Texas has been blowing up the last 3-5 years, right? Prices have skyrocketed from 8 caps all the way down to when you first acquire it, then you, of course, you increase the rents, which increases the cap rate. But are you worried at all that Texas have a boom, that Texas, I know there's a lot of jobs moving into Texas and lots of people are moving there, but is there any nerves for you about Texas? Are you guys looking at maybe getting out of Texas in a couple of years and moving into another market? What's your
So
thoughts on the market cycle in Texas?
yeah, that is a really good point, actually. But I think Texas is obviously so big. It's a huge market.
Yeah.
DFW is definitely synonymous with what you just described. But there are still some pockets within DFW that is amazing. But what I do want to bring out is the submarket, especially in Houston right now. Houston is actually on a recovery, right? It's definitely not. It's not a market where the caps are so compressed like you'd see in DFW. So there's still some room for, guys like us, because, you have some of the institutional investors who've kind of moved out of some of those markets. So, guys like us can just kind of come in, take down, between 100 to 150 units, apartment deals. We're not trying to buy 400 units like some of the big guys. So we can still find really good value add,
Okay.
especially managed by mom and pops in those markets.
Got it. Okay, cool. Are you now, in terms of the market and the economy as a whole, we know that we're coming up on a market crash eventually. Personally, I don't think it's going to be real estate related, but what are your thoughts on the upcoming market crash? When you think it's coming, or what you think, how it's going to affect your business, if at all?
So the most important thing to say is nobody knows when this crash is coming, right? But we know, right, over years and decades that is, after prosperity is adversity, right? We know that this is just like, after every winter, there's a spring and there's a summer. Never feels right. So
Yep.
I gotta put that out there. We don't know, essentially, right? One thing we do know is multifamily apartment buildings essentially has been the strongest asset class in real estate, when you look back historically during recessions, right? So that's why we only buy for cash flow, right? We're not trying to buy based on some kind of future, guesstimation or
Appreciation.
speculation or appreciation. We don't do that, or we only buy for cash flow, and we buy in pretty strong markets with great job growth and
Yep.
pretty strong demographics. So if, to go back to your question, if that crash does come, we're not worried as such, because not only are we going to put aside some capital to help us through some vacancies that we might see. For the most part, multifamily stays pretty strong and robust through the down cycles and through recessions. Now, I got to end with this though. let's not forget, with every down there's an up, right? So we're going to make sure that's our job, to preserve the capital of our investors so we can basically ride the down. And when the down is happening, we basically just buy more and ride on the up. So we're actually not scared. We welcome recessions because they're part of life, just like we all have down days as human beings, right? So we definitely welcome them.
Love it. Awesome. Yeah, I know. And people were like, "Are you scared of a recession?" I'm like, "No, I'm excited. I've got cash ready to go, to buy everything for 50 cents on the dollar." And, all the people who bought, those apartment buildings 5 or 7 years ago, and they're coming up on their refinance now, they better do it now before, those cap rates go up, and then they can't pull out the money they want to, and then they're going to be forced to sell. And then there's going to be all these markets on the
That's
listed
right.
on the online, and then there's going to be so many units that even guys like me and you are not going to we're going to have so many deals to look at. Right now it's very hard to find, like, one out of every 100 deals I look at is actually a good deal that I is willing for me to submit an offer on, that's going to be like anywhere close to what they're asking for, because the market has been so hot. That brings up another question. So what kind of neighborhoods are you guys looking at for your apartment building? C class, B class, A class?
So we're pretty much staying in, kind of C plus,
Okay,
B class buildings, right? In B class neighborhoods, right?
got it.
So because as you kind of go down, you get a different demographic that it's more, hard to manage, and capex intensive. So we try to stay away from those markets. Now, if we do get a deal that we feel like kind of makes sense to us, and we can get a quick turnaround in terms of going in, basically putting some value add and essentially trying to sell that pretty quickly, we will do it. But for the most part, basically C plus, B class assets in B neighborhoods.
Got
But
it.
I
Awesome.
definitely, I
Yeah,
definitely
that's
want to
my
go
same
back.
mentality too. But the apartment, go
No,
ahead.
I was just saying, I want to go back on what you said, right? Because you were saying like people meet you and say, hey, is there a recession coming? And I think I love talking about mindset a lot. And I just want to say out there to those who are kind of sitting on the sidelines thinking, I don't want to jump into, real estate investing now because there might be a crash
Uh-huh.
coming. I want to say to you, just do it, right? Just do it. Just make sure you buy for cash flow. Make sure you don't overpay. In real estate, as a lot of people know this, you buy, you make money when you buy. So make sure you buy right. Make sure you buy right.
Yep, I agree. Yeah, don't sit around and wait for the best deal that nobody's ever seen before, or wait until the market crashes. You can buy everything super cheap. It may not happen. It may happen in 7 years. Who nobody knows when the hell it's going to happen, or if it's going to take a hit on real estate. It could be the stock market only, and the stock market drops, and everybody's like, well, I'm just going to hold my real estate, and everybody's fine. So you never know what's going to happen to it. Yeah, I urge people too, if there's a deal that comes across your desk, don't worry about the market. Buy it right. Buy it for cash flow. Don't class, because that's the one thing that is going to be hit. But me and you doing the C class or B class, the affordable properties, blue or white collar jobs, with people who are working full time. I mean, that's going to stick around through any recession. No matter what happens to a recession, there's still going to be those blue collar jobs, service jobs, all that kind of stuff.
Absolutely.
Awesome. Well, thank you for coming on the show. What's the best way for people to reach out to you if they have more questions, want to learn more about you, or ask you some?
Yeah, definitely. So I'm on Instagram too. I'm not as active as I used to be. Got so much going on, but Instagram, check me out. Ola Dantis, OLADANTIS. You can't miss me. And that's, for all my social media platforms. I'm pretty ubiquitous, so you can't miss me if you just Google Ola Dantis. I'm everywhere. And if you want to know more about our company, maybe just learn more about kind of our investments, you can go to investwithola.com. So that's investwithola.com. And I'll be more than happy to have
Nice.
a chat with you. Thank you so much, Anton. I appreciate it.
Yeah. Thanks for coming on.